Hello, this is Bode Oshosami, and you're welcome to another episode of Global Business Insights, where we go deeper into the business headlines. In China, the annual October inflation rate dropped to 0.3%, missing expectations of 0.4%, and also lower than the 0.4% seen in September, also the lowest read in 4 months. China's producer price index fell 2.9% year-on-year in October, following a 2.8% drop in September, worse than forecast of minus 2.5%. Today, China kicks off its Singles Day, the equivalent of Black Friday. The day is an opportunity for analysts to appraise recovery in consumption in the final quarter of 2024. Last week, Wall Street stocks had their best week of 2024 as all three major indexes pressed to record highs after Donald Trump won the 2024 presidential elections. Bitcoin was up 4.7% to an unprecedented $80,092 on Sunday, but is the euphoria overplaying the Trump card? Energy markets are focusing on China, where expected higher tariffs may hurt growth even more and drag down demand for oil in 2025. Brent crude fell over 1% in the US trading session on Friday. In Egypt, the annual consumer prices in urban areas inched up to 26.5% in October versus 26.4% in the prior month. The index increased 1.1% month-on-month from 2.1% in September. The US has ordered that starting today, Taiwan semiconductor manufacturing company TSMC should stop shipments of advanced chips to Chinese customers used in artificial intelligence applications. This covers certain sophisticated chips of 7 nanometer or more advanced designs destined for China that power AI accelerator and graphics processing units. And in Nigeria, the chairman of the Presidential Tax Reform Committee, Mr. Taiwo Oyedele, says businesses will suffer while the economy would retrogress if state governments are allowed to collect value-added tax. He also said the tax reform bills will go through the process of legislative approval and not withdrawn for more consultation, as was directed by the state governors. We also have a special guest, senior partner and head of tax regulatory and people services KPMG Adewale Ajayi, looking at how businesses can navigate the challenges in the current environment. Our markets rallying in the US on hopes that may not be realized in a Trump presidency. Indeed, money managers are hoping they have seen the end of a multi-year regulatory blitz in the exit of the Biden government. They also see the way for a more market-friendly Securities and Exchange Commission that would nod more cooperatively to new financial products and allow alternative assets, including crypto, more room to thrive. The banking sector, hoping to be a major winner, is also expecting less strict regulation, even watering down on the Fed's annual stress tests. Investors see more industry mergers, and as cost of funds go down, more appetite to finance deals. But analysts are warning weaker regulation in the past paved the way for more bank failures. Also on exploration and production, the push to open up federal lands may indeed expand drilling, but given the multi-year time scale involved before oil is produced, any new production from federal lands would likely come after Trump's 4-year term is already passed. There could also be legal pushback as well as lower investment attracted to lower margins if oil prices come down anywhere as much as Trump is hoping it will be. However, at the global UN climate talks hosting 200 nations holding in Baku this week, what was initially considered to be a fight for money may have taken a turn for the worse with Trump's election. Progress can no more count on the support of the world's largest economy and hopes that emissions from burning coal, oil and natural gas are close to peak may have been dashed. Finally, if Trump does reduce taxes and imposes higher tariffs, this could push up prices, leaving the Fed little choice but to maintain restrictive monetary policy for longer than is currently anticipated. In other words, it could all be complicated. According to the latest October Stanbic IBTC PMI report in Nigeria, the downturn in the business environment further worsened at the start of the fourth quarter, still reflecting the impact of price pressures on consumer demand and business investments. To call it a challenging environment is to put it mildly, but what can businesses be doing to cope much better? Adewale Ajayi, Senior Partner, Head of Tax, Regulatory and People Services, KPMG, is a veteran in professional services with over 30 years experience. You could say he has seen it all.
I do agree with you that we indeed live in challenging and interesting times. There's so many issues that businesses are facing today, but I believe that with the right strategies and mindset, businesses can successfully navigate those issues and thrive. What I want to do now is to pick on 5 issues that are considered top of mind for every business. I think the first one has to do with the high cost of doing business. When you do business in an hyperinflationary environment like Nigeria, you got to be creative. You got to find a way to adapt to the rising cost of doing business. And this cost of doing business are driven by 2 factors. 1, the high energy cost, and 2, the depreciation of the naira. And I don't think that these 2 factors are going to change pretty soon. So businesses have to find a way of growing their top line while at the same time streamlining and optimizing their cost. Without this strategy, no business can thrive. And the second issue for me would be, how do businesses adapt to the new work models? Let me speak about 2 issues. The first one is the hybrid work environment. Anytime you interview a new employee today, one question that I believe will crop up is whether you have a work from home policy. I have heard this question many times. So if a business needs to attract and retain the right talent, they got to find a way, a creative way of successfully integrating a work from home policy into their work culture. The second thing, of course, has to do with the fact that we live in a gig economy. Nobody wants to work for a long time. Nobody wants to work for one single firm for 5 years, 10 years, 15 years. I can share my experience. Anytime I'm interviewing or I'm speaking to our new hires, and I say to them that this is my 33rd year of working in KPMG, what I often hear in the room is gasp. They just can't believe that someone in the right sense can spend 33 years in one single company. And I do understand, because these days employees want short-term contract type of work. They want to work on projects. They want to work on tasks. They want some flexibility in the way things are done. And so businesses have to find a way of adapting, to these new work models. The third thing I believe is top of mind is, how do you adopt ESG? I know that everyone is talking about ESG, but the issues that businesses face is, how do you incorporate this into the operations? Next week, we're going to be talking about COP29 that is happening in Baku, Azerbaijan, and we're going to hear stories about energy transition. I remember when the whole story started around 2020, everyone is talking about a new way of reducing carbon emission. BP, for example, decided that they're going to cut their oil and gas output by 40% by 2030. But the reality has changed. Now, they've slowed down on the energy transition strategy. In fact, they've said the target is now 25%, and they want to focus on growing their financial returns to shareholders, right? So we're going to see a lot of companies slowing down their energy transition. Again, it's the same thing, with Nigeria. We passed the Climate Change Act, and one of the provisions of that act is that Nigeria will introduce carbon tax. But what do you do in an environment where you want to monetize the resources, from petroleum? You need to attract the investors, and the issue of carbon tax will be a disincentive. And so, yes, it is there in the law, but I don't think that is something, right, that we're going to implement very soon. In fact, we made it abundantly clear that we are going to use gas as our engine of growth and to fuel the growth that we need in Nigeria. And so, yes, I know we've committed to net zero, right, by 2050, 2060, right? But the fact of the matter is that we're going to do what matters most to us, and that is growing our production, to 4 million barrels of crude oil per day, right, within the next couple of years, right? So, yeah, ESG will continue to be an issue on the agenda, but I'm sure that a lot of businesses will still struggle and as to how to incorporate this into their agenda. And the third issue, of course, has to do with digital transformation. There is no business that want to thrive today that will not have a digital transformation agenda. Every business needs to be able to create awareness of technology within their workforce. In fact, any business that want to be competitive must have technology as as one of the enablers that they need to drive that growth. When you look at what is happening in most countries today, the focus is always on how to grow revenue. And many countries are facing this issue. There are so many countries that have deficits that they're trying to plug. We listened to the budget by the Chancellor of the Exchequer in the UK recently, and she spoke about how to grow tax revenue. The same thing with South Africa about 2 weeks ago. The same issue, how to grow revenue. How much more Nigeria, where we have about 9 trillion in deficit? And one way of doing that is through tax revenue, because that is the most sustainable way of growing your revenue. And the only way you can grow that revenue and bring more people into the tax net is to leverage technology. And we've seen this with the Nigerian Federal Inland Revenue Service. They've introduced technology. They're spending big on technology. And so the question is, if tax authorities are spending that much on technology, how much more businesses? They need to find a way to manage their tax rates. And one sure and certain way of doing that is to leverage technology to reduce their tax exposure. And the other thing that I believe that businesses have to deal with is, how do you stay agile in an environment that is competitive? I'm often reminded by the saying by one of our national senior partners in KPMG. It says to us every time that speed kills, but it only kills competition. So if you want to stay atop the competitive environment, you got to be more responsive. Every business has to find a way of adapting, and responsive to changes in the environment. And businesses have to do this quickly and faster than competition. I mean, we know that Charles Darwin says that it's not the most intelligent, right, nor the strongest of the species that survive, but that species that is able to adapt to changing conditions. So any business that wants to thrive needs to be agile. So these are the issues, to my mind, that businesses need, to address for them to thrive in this competitive environment.
Well, that's all we can take on this episode of Global Business Insights. This is Bode Oshosami. Thanks for sharing on Facebook, LinkedIn, X, and YouTube. And again, thank you so very much for watching. Bye-bye.